Hello and welcome to the day ahead. It is Wednesday, October the 5th. I'm Andrew Gagan. Well, global equity markets rallied overnight with the less than expected rates move by the RBA sparking hope among investors that other central banks may be less aggressive. Wall Street posting its best two-day rally in 2 years, fueled by softer US economic data, which pushed Treasury yields lower. The Dow and S&P 500 posting their biggest back-to-back rallies since April 2020. The Nasdaq also surging as rate-sensitive tech stocks rose. Well, the mega cap Amazon, Microsoft, Apple and Alphabet led the rally. And banks including Citigroup, Morgan Stanley and Goldman Sachs climbed more than 4%. The rebound follows the S&P 500's lowest close in nearly 2 years last week. The stock specifically, Elon Musk is reportedly pressing ahead with his original offer to take Twitter private, which sent the social media firm's shares surging. Tesla shares were up about 6% before that news broke and subsequently trimmed those gains. And electric car maker Rivian jumped after revealing it produced more than 7,000 vehicles in the third quarter, 67% more than the previous quarter, and has maintained its full-year target of 25,000 units. We're helping to spur investor optimism as signs of a softening US economy in the wake of aggressive rate hikes from the Fed. US job openings fell by the most in almost 2.5 years in August, from over 11 million to just over 10 million, an indication that the labour market may be cooling. Despite the fifth month of decreases in job openings this year, the JOLTS report showed vacancies remain above 10 million, with 1.7 job openings for every unemployed person in August. Factory orders were flat in August, while chain store sales in the past week were up more than 12% on a year ago. And that US economic data, combined with the Reserve Bank's decision to slow its pace of rate hikes, saw the US 10-year yield fall to 3.63%, while the 2-year was steady at 4.1%. And the US dollar weakened against most major currencies, but the Aussie was the biggest mover in the wake of the RBA's decision, although it has recovered from its lows. And the World Bank has updated its economic growth forecast and is expecting that the cut to Russian energy exports to the European Union will tip them into recession next year. It's forecasting GDP in Eastern Europe and Central Asia to contract 0.2% this year and grow by 0.3% in 2023. Well, the Australian share market is set to extend its gains after yesterday posting its strongest rally since June 2020. ASX Futures currently up 1.6%. The price of oil surged again overnight on expectations of a large cut in crude output from OPEC Plus producers ahead of their meeting later today. Brent crude up more than 3%. Iron ore futures rose around 1%, while base metal prices were firmer, with aluminium prices continuing to rally up another 6%. And spot gold has risen to a 3-week high to $1,723 an ounce, while silver has extended its gains, rising to a 3-month high. And the crypto market has rallied in tandem with equities, Bitcoin up around 4%, taking it above 20,000 US dollars. On the data front today, locally, we get retail sales for the month of September. And that is your day ahead. We'll see you again tomorrow.